It's happening. President Trump is finally expected to make an announcement on the Bitcoin Strategic Reserve at the White House Crypto Summit tomorrow. What should we expect? What are insiders saying? Meanwhile, the IMF has prohibited El Salvador from continuing to accumulate Bitcoin for their own reserve. What are they afraid of? And is the US government involved? And why is Bukele openly defying them by continuing to buy Bitcoin? Plus, is Bitcoin getting ready to break out of all-time highs priced in gold? And we take a look back at 2021 to see how this catalyst could result in a face-melting rally to $400,000 per coin this year. The White House is hosting their first ever crypto summit tomorrow, and President Trump is expected to announce clarity and outline plans for a Bitcoin strategic reserve for the country. The dust has settled after Trump's questionable post on Sunday, where he mentioned a peculiar basket of crypto that would apparently be in the reserve. Trump's Commerce Secretary Howard Lutnick gave a statement to the press yesterday where he suggested that Bitcoin would receive unique status under Trump's plan. Lutnick said, quote, "A Bitcoin strategic reserve is something the president's interested in. He spoke about it all during the campaign trail, and I think you're going to see it executed on Friday." He continued, "So Bitcoin is one thing, and then the other currencies, the other crypto tokens, I think will be treated differently." It's also very notable that ahead of Friday's summit, the founders of the three biggest US-based retail crypto exchanges, Coinbase, Kraken, and Gemini, all signaled they prefer a Bitcoin-only reserve, if there's one at all. And then there's perhaps the most influential attendee to the summit, Michael Saylor, whose company's strategy owns 2.4% of the entire Bitcoin supply, holding just shy of 500,000 Bitcoin. Saylor was on Fox Business yesterday giving his opinion on the reserve and outlining the clear delineation between different digital assets being proposed.
Do you think taxpayer money should be used to purchase these tokens and coins to fill the reserve?
Well, I think the way to think about the industry is there's digital commodities, that's Bitcoin, an asset without an issuer. There's digital currencies like the stable coins. That's really important for US dollar supremacy in digital commerce. There are digital securities like tokenized stocks and bonds that will actually provide a capital efficiency and globalization for American securities. And then there are digital tokens, assets with issuers that provide digital utility that are very interesting and compelling. Their role is capital creation for the small and mid-sized companies that are blocked from the capital markets right now. I think that it's wise to capitalize a country or a company on a commodity, an asset without an issuer, something like a property. You could buy oil. Bitcoin is a commodity. I think that
XRP is attached to a company, Ripple.
I think that those are tokens, and we should have a regulatory framework to allow them to be issued because...
Issued, but in the reserve? Should they be in the reserve?
I think the emerging consensus in the industry is that Bitcoin should be the element in a strategic reserve over the long term for the country. But if you wanted to support various investments in a sovereign wealth fund, that would be up to the executive branch.
Okay, so let's be clear. I'm hearing you say the reserve fund should really have the tested one, and that is Bitcoin, and not Solana or Cardano or Solana.
The important thing to keep in mind is Bitcoin is the one universally agreed upon foundational asset in the entire crypto economy because it's the asset without an issuer. It's neutral. 99% of the energy and the capital has flown into that one.
So as Saylor points out, the consensus in the broader industry is that Bitcoin is the only one that makes sense in the reserve due to the fact that it's an asset without an issuer and the only one considered to be commodity-like. Trump's AI and crypto czar David Sachs posted this banger on X today. Over the past decade, the federal government sold approximately 195,000 Bitcoin for proceeds of $366 million. If the government had held the Bitcoin, it would be worth over $17 billion today. That's how much it has cost American taxpayers not to have a long-term strategy. Matt Hogan, CIO of Bitwise, wrote this in a memo to investors this week. After the dust settles, I suspect the final reserve will be nearly entirely Bitcoin, and it will be larger than people think. Besides clarity on regulation and policy regarding all digital assets, it's still unclear if meaningful plans regarding a Bitcoin strategic reserve will be announced tomorrow or not. Regardless, one thing is crystal clear. The Overton window has shifted massively in regards to Bitcoin on the global geopolitical stage. And the fact that these types of conversations are happening at the highest levels of government is a massive deal. Smaller nations like El Salvador and Bhutan were the earliest movers in this monetary revolution. The Prime Minister of Bhutan spoke with Al Jazeera recently about his nation's experience in Bitcoin mining.
In Bhutan, gold is everywhere, a Buddhist symbol of the everlasting nature of enlightenment. Now this small Himalayan kingdom is investing in a future it hopes will be blessed with what backers call digital gold, Bitcoin. It's also finite and supposedly everlasting.
There are hundreds of people who have made billions of dollars on the back of Bitcoin. Why aren't governments doing more? Even if they seem to be
Prime Minister's chairing Top Gay says Bitcoin is a strategic reserve, one currently worth more than $1 billion.
We have used Bitcoin for health, to provide free healthcare, for our environment, but these are minor. The main use of Bitcoin has been to finance the salaries of public servants.
Well, Mr. Prime Minister, it seems like governments around the world have finally gotten the memo. Like El Salvador, who became the first country in the world to make Bitcoin legal tender in 2021 and has since been adding to their own strategic reserve, today holding over 6,000 Bitcoin. However, the Latin American nation's Bitcoin future is uncertain, as a recent agreement with the IMF explicitly prohibits them from continuing to use public funds to purchase additional Bitcoin, as part of a $3.5 billion loan to help service their ballooning debt. But the president of El Salvador, Nayib Bukele, confusingly continues to purchase additional Bitcoin nearly every day since the agreement has been signed. He even posted on X, insinuating that El Salvador's Bitcoin purchases would not stop. So either he's found some sort of loophole, or he's outright defying the IMF and breaking the agreement. Head of Alpha Strategies at Bitwise, Jeff Park, thinks the actions of the IMF is the real signal on whether a US strategic Bitcoin reserve is close or not, since the IMF is basically run by the United States, as they have 20% of the total voting power, giving it veto authority. Park thinks this makes it clear that the US doesn't want sovereigns holding BTC on their balance sheet, as it would undermine the dollar's hegemony. Park then goes on to say that the real signal in Bitcoin's price appreciation in the near term is not the strategic reserve, but declining interest rates, which he says will lead to a sustained rally. I'm not sure I agree with Park that the Trump admin wanting a strategic Bitcoin reserve and the IMF not wanting other sovereigns to accumulate can't both be true at the same time. But I do agree with his assessment that the real driver of number go up this year will be Trump lowering interest rates and a further increase in the global money supply. As I've covered in previous videos, the run-up in Bitcoin's price over the last year from around 30K to where we are now has predominantly been on the backs of hype surrounding the ETFs, the halving, Trump's support during the campaign, and his eventual election win in November. All of the price move up has happened with very little increase in the money supply, which many argue is the main driver of Bitcoin's huge price increases historically. But now, as interest rates globally start to come down, and as the Fed gets closer to lowering rates, the money printer is just getting warmed up, which I think translates to a massive move up for Bitcoin. To give you an idea of how fast this thing can move when the money printer is turned on, here's a post from BitPain on X. On October 16th, 2020, the Bitcoin price was $11,500. Just 126 days later, on February 19th, 2021, it was $57,500, an increase of 5x. This corresponds to a weekly compounded growth rate of 9.4% sustained over 18 weeks. A comparable move today would take us to $435,000 by July 8th. Another chart I love is Bitcoin priced in gold. With gold's historic rally over the last year, Bitcoin is still just knocking on the door of the previous all-time high from late 2021. As this chart shows, it's looking primed for a breakout. This again makes me think that this entire run up to 100K was just the first inning of this bull run. Gold historically runs first and Bitcoin runs after. If history repeats, expect the second half of this year to get wild. So I know I sound like a broken record, but you're not too late to Bitcoin. Start stacking today with services like Swan. Visit swan.com or download the app by searching Swan Bitcoin in the App Store. Swan has the fastest and easiest onboarding experience in the industry. You go from sign up to buying real Bitcoin in minutes. And are you ready to own Bitcoin in your retirement account? And I'm talking real Bitcoin, not proxies like an ETF. Swan IRA makes it simple and secure. No hidden fees with unmatched support and easy onboarding. Swan IRA helps you build your legacy your way. Learn more at swan.com/IRA. And remember, you can make a 2024 IRA contribution until April 15th. And a quick shout out to Mara, the largest publicly traded Bitcoin miner, for supporting this show and for helping make Bitcoin the world's most decentralized and secure monetary network. Now, before we close, I want to give you an illustration of just how profoundly early we still are to Bitcoin. Mexican billionaire Ricardo Salinas was on Bloomberg recently talking about his massive exposure to Bitcoin.
In my personal portfolio, the one that I manage myself, I'm pretty much all in. I got about 70% in Bitcoin-related exposure and 30% in gold and gold miners exposure. So 70-30. That's it. I don't have a single bond and I don't have any other stocks except my own.
So on Bitcoin, I mean, I think we're down about 20% since the Trump inauguration after a big rally post-election. So buy the dip or wait?
Bitcoin, you have to think 10 years and buy everything that you can. It's not going to go anywhere except up because the dynamics are such. It's the hardest asset in the world. There's only 21 million of those tokens, and 20 have been distributed and mined already. So there's going to be 1 million more from here to 2040, I think, 2140. So it's the hardest asset. Not even gold is this hard. You know, gold gets inflated at about 3% a year through additional production from mines. Bitcoin doesn't. So yeah, it will go up and down, and there'll be speculative frenzies, and people will talk about it. What most people should do is dollar cost average, which is have a program where you can buy so much per month and you buy every month, and that will take the uncertainty away.
So sure, there are a bunch of billionaires with a tiny percentage of their net worth in Bitcoin, but people with capital and conviction as strong as Ricardo Salinas are incredibly rare. It's been estimated that 39% of Americans have some exposure to Bitcoin. That number is misleading though, as the vast majority probably have tiny amounts on Coinbase or some other large exchange. It's estimated that only 400,000 people, or less than 0.005% of the global population, have more than $100,000 exposure to Bitcoin. So with 94% of the total Bitcoin supply already on the market, for that tiny percentage to grow from 1% to 2 to 5%, the price will have to go up significantly from here. Just some food for thought for how early we really are. But I'd love to hear what you think of all this. Leave a comment below, like the video, share it with friends and family, subscribe to the channel, and hit that notification bell so you don't miss the next video. Thanks for watching, and remember, TikTok, next block.